Kevin, I want to come to you. Any quick thought on Meta? And also, I want to go to your covered call on Nvidia. Kind of walk us through that trade.
I mean, just real briefly, you guys covered Meta perfectly. It was our top pick coming into the year. It remains that way. Time will tell from an AI standpoint, but don't forget the hardware. Don't forget what they're doing with advertising, how they're monetizing AI in advertising specifically. Margins are just going higher. I think the numbers are going to be fantastic. But let's pivot to Nvidia, because I think this goes back to the opening of the show. If things are frothy, what do you do? Because many people, many viewers are lucky enough to own Nvidia, and it's gone up a lot. The last time we bought it in mid-April, I think it was under $90 a share, and it's in the 170s right now. We now have a 12.6% weighting in our growth strategy in the QDevo, Frank, and that's a lot for one name. This isn't a hedge against a stock going down, it's a hedge against position risk. So we wrote a 1-month covered call for a $180 strike. We brought in $3.50. It expires in a month. If we're called out of it, we're called out at 183.5, which is over $10, more than 6% from where it is now in a month, and that's on half the position. So it's just risk management, not a critique against the name by any means.
Right. When you're doing a cover call like this on Nvidia, of all names, I mean, actually, why on Nvidia? I mean, especially with some of the news that we had. Did you do this before the news earlier this week with the H20 chip?
No, we did this yesterday because the position size, and we're running a portfolio with a risk lens being very, very important for our investors. And anytime you have too much in one stock, and it's great that it's going up. I mean, don't get me wrong, it's really wonderful. But things don't always go up forever. And when they roll over, we want to, and I'm not suggesting that this one's going to, but when things happen, we want to make sure that we've got the position size properly. So this is professional risk management.
And was it an intentional 1 month? Because I believe, not looking at the calendar, they would expire before the earnings come out?
Yeah, absolutely, 100%.
Okay, right. So
because Nvidia reports later than everyone else.
Right, August 27th. So are you going to be naked in protection, in other words, when the quarter goes? You don't have to make that decision now.
No, that would be our expectation.
Right, because the stock goes to 200, I imagine, in advance of the earnings, I imagine you'll have a different view.
We will, if it's at 200 at the end of next month, a week before earnings, will be called out. But if it's not, our option will expire on the 25th, I think, and then we'll just remain long into earnings.
Right.
Because we're expecting earnings to be good.
Wise, you own Nvidia as well. So, I mean, what do you think of his trade, and also just your outlook from now until earnings? Obviously, we're going to get reports from the hyperscalers, a number of other players. So we'll have some sense of demand.
You know, I think it's generally a smart strategy. It's not necessarily what I do. I'll do it in some instances, not here, because this stock could be up or down for no reason, $6, you know, on a day. I'm just picking a number, and you pick that number because it would take them to 183. So I think it's a good trade. Look, it's all how you manage your portfolio, manage your risk, and what you've told your investors you're going to do. So he's abiding by his discipline that he's communicated to investors. That's what he's doing. Guess what? It's worked marvelously for him over the years. So why wouldn't he keep doing it?
That's why I'd pay him $100 million if I could.
Well, where do I sign?
Kevin, we want to get to one of your other trades. You actually bought some more Apple. We actually had Bill Baruch on the show. He also bought some more Apple. What's the motivation behind buying Apple?
I got to take a break. I'm just being too nice today. It's so out of character.
No, it's just you're surrounded by like your favorite
You got a water right there. We're going to get to Kevin's trade.
I feel like it's a Friday in the summer. So we're all out of character.
Why buy more Apple here? A lot of concerns about Apple's ability to compete in AI. Also some talk about buying Perplexity. You're trying to get in front of the idea that they might make an acquisition that would juice this stock, or some other reason?
I don't want to pretend to know what they're going to do when it comes to artificial intelligence or Apple AI, but I do believe that they're going to do something. I feel like this device will be a great catalyst for us to be able to interface with artificial intelligence. How they decide to do it, I don't know. But remember, we're an active portfolio. So I sold out of the position, Frank, just to go back in time, back in December. So we liquidated Apple at 247.5. At that point, we thought it was a little bit too pricey at 250. At 200, we feel the stock is very attractive, and it's a longer-term investment. We know we're going to get paid while we wait. But think about it. If you're just an investor, you're in an index, stock was at 209, it went to 260, it's back to 209. Nothing really happened. You collected a dividend. We sold it. We netted a 20% real profit in the position, and we started buying it again. And maybe we started early. The first position was at 234, and we bought finally our last position this week at 209. So we now have a 5% full position again with an average cost of 209. So we delivered a 20% real return net on the position. We collected the option premiums that we've been writing against it, and we collected a small dividend. So I feel comfortable here as an investor again at 200, where I didn't at 250.
All right. Apple shares right now up just about 0.5%.